You have lost money in the stock market. I have lost money in the stock market at times, but how do you survive a bad trade? How do you make sure that when you are investing and you make a mistake or something happens, that doesn't ruin your entire account or take you away from your financial goals? Let's go ahead and break it down. Now, anytime you're investing, you are taking a risk. I think we all understand that. The greater the risk, the greater the reward. But you don't want to do something that loses you all of your money. Nobody wants to do that. And also, let's go ahead and recognize that sometimes when you lose money in the stock market, it is not your fault. Okay, there are times where you do your research, you choose a good stock, and some crazy announcement happens, some international conflict happens, something happens with the product that nobody expected, and that causes you to lose money. The key is, how do you make sure that it doesn't ruin everything? How can you survive these bad trades? Let's go ahead and break it down. I've got 3 tips, and I think I got one bonus near the end that's absolutely going to help you out. The first one here is set up good, strong rules for how you are trading and be very judicious around what these rules are, particularly around the money that you're using. So for example, there are a lot of different ways to do this. One way is to consistently trade with the exact same amount of money. So let's say that I have $1,000 to trade with. Every trade that I do is going to be with $200. What is the advantage of doing that? Well, number one, that's only going to limit me to a maximum of 5 trades. I got to be careful and be very judicious around what I'm trading and how much I'm trading with. The benefit of that is, hey, look, if you lose, you can only lose a maximum of $200 per trade. Okay, so that's going to leave me with something left over. Also, I can understand a bit about what my goal is and how much I'm trying to make. So if I'm only trading with $200, I can only expect to make but so much, right? As opposed to just holding out forever and ever and just hoping that something miraculous happens. This is better than just saying, hey, I got $1,000, I'm putting it all on red, right? I'm putting it all in this one stock. If it doesn't work, I'm losing everything. You don't want to do that. I see some people who also cut their money in half, meaning, hey, I've got 1,000. The maximum I'm putting into one thing is $500. Now I only got $500 left, right? That one's in a trade, that's working, doing whatever. Now, with the last $500 I have, I can only do $250. So I can only be in about 3 trades at once, depending on how you want to look at it. In either case, you've got rules set up. I don't really know what is the best rule. It really depends on what you are trying to do and what your goals are and how you trade, but you want to make sure that you have some rules in place. Another one that I like to use, and this is more for medium to long-term investments in trading, or really investments because it's long-term, is y'all know my 5% rule. Anytime I'm investing in one single stock, I say 5% or less into that one single stock. This affords me the opportunity to be wrong. An example right now that I am living through is Smucker. It is a quality dividend stock. It has not performed, but guess what? I can be okay waiting into December and selling at that point because I only have about 1, maybe 1.5% of my overall portfolio in that one stock. I can be okay losing that entire amount because I've got, Palo Alto Networks and Google and Amazon making way more than that, right? I've only got a tiny bit. Everything else can make up for that one stock that just didn't turn out for whatever reason. So make sure that you have some good money rules in any of your portfolio to ensure that you are doing the right thing, you are protecting yourself. The next one is having a stop loss. Now, if you don't know what a stop loss is, we need to talk, okay? You don't want to be out here trading without a stop loss. Now, I've done an entire video, probably need to do a refresh because that was like 2 or 3 years ago that we did that. But understand what a stop loss is it's an order that you can choose inside of your investments that say, or inside of your stock or inside of your app that says, sell if the stock comes down to this particular stock, this particular price. That's going to help you out because if you are like me, and you're a parent, or you're going to work, or you're recording videos and doing something where you're not in front of your screen every single day, there could be something happening right now, and I own a stock that could drop 10%, and I might not want that, right? So if I have that stop loss, it'll come down and trigger to that price, it'll sell me out of that stock, and I can be relatively safe knowing that I'm not going to lose everything. I can choose basically how much I want to lose, or right around that amount. That's the beauty of a stop loss. However, it does have risk, okay? One of the risks is there is a time, or there have been times rather, where a stock can come down to a certain price and then go up and be fine. That does happen, right? It could be earnings season, or it could be an announcement. Stock starts to drop in the morning and then bounces back in the afternoon. So you could have sold at the bottom and then the stock just does well after that, there's a risk that you are taking there. Also, depending on what type of order you use and how fast the stock is moving, there are times where it can trigger a little lower than what you expected just because the stock is moving so incredibly fast and the software just can't always pick it up and sell it at that specific price. So there are some risks there, but again, if you're trading, I would argue you still want to use it. I think the benefits outweigh the rewards because, again, if you don't have great internet connection, if you're not at your phone, at your computer, or any number of things, that stop loss can absolutely save you from losing more than what you expected. And I'll argue, too, it's kind of good to know what the approximate amount that you could lose could be. Like, I can sit down and say, look, I'm gonna set my stop loss here. I can lose about 10% or $20 or whatever it is going to be on that trade. Having that can absolutely help you out from just putting it all on red, right? Just put everything in one and just hope that it works. A stop loss can help you be a lot more disciplined. The next one is going back and studying your mistakes and your successes. I don't see enough people doing this where they're like, oh, I did this, I made some money. I'm like, well, why? What about that particular stock and that particular trade made sense? What happens when we are wrong? I see far too many people investing in wild things and they don't go back and say, well, wait a minute, let me come back and inspect what I did wrong. Was there something that I missed? Was there something that I misread? Is there something I didn't understand? So you can make sure you don't make the exact same mistake again. I don't understand why people don't do that enough. It's really like watching your own sports highlights, right? Going back and filming and recording yourself, say, oh, my technique was off here. I misread the defense or whatever sport it is, right? Going back and making sure that you are either correcting mistakes or doing things that were good consistently. You want to make sure that you're doing that. An example for me, outside of finance, I'm relearning golf. And when I have a good swing and I record it, I'll go back and watch that thing like it's SportsCenter all the time because I want to make sure that I'm doing the right things consistently. When I make a mistake, I go back and say, oh, this is where I keep making the exact same mistakes. When I'm trading, and I've showed people this inside our members only, I'll go back and download all of my transactions for the month when I make a lot of trades and see, this is the day I bought it, this is the day I sold. What happened in between? Where did I make that mistake? Was my stop loss at the right spot? Did I trade during earnings season? Was it some unexpected announcement? All of these things can help you become a better investor, but it's only if you understand that you got to go back and study the successes and also the misses. Here's the bonus though. Here's the bonus. You also want to be careful about your ratios. What do I mean by ratios? When you're trying to invest, you should set out a goal of how much you're trying to make. So in this case, let's just use $100. What I like to do is my goal is to have a 3-to-1 ratio, meaning I am looking to make 3 times more than what I am potentially losing. So if I'm trading $100, just for example, I would like to make 30 and I would only like to lose 10. How would I do that? Well, I set a stop loss at 10. Okay, right? When I go from 100 down to 90, it would automatically sell me out. Okay, now what is the advantage of doing that? Making 30 and losing 10. That means I can be wrong 66.6% of the time, but I can be wrong a little more than 60% of the time and still make money. How does that work? Let's say I'm doing a trade with $100 again. Okay, if I'm wrong twice, I had that stop loss, I can lose $20. $10 in the first trade, $10 in the second trade. I lost $20. If I win on that third trade, I'm only right 1/3 of the time and I make that $30, that means that I made a profit at the end of the day. My profit is $10 because lost 10, made 30, right? You do that math, you end up with a $10 profit. That means I only need to be right, but 1/3 of the time, which is a terrible ratio, right? But if I can be right just 1/3 of the time, I can still make money. However, if you don't set that up, if you don't set up a stop loss, if you don't pay attention to any of those ratios, then this is not going to work for you, right? If you don't have any of those rules, it's not going to work for you because if you put all of your money on the first one and you lose, it's gone, right? So you want to make sure, I'm saying, oh, okay, well, I'm only doing $100 trades and I'm making sure that my maximum loss is $10 and when I make 30, I get out. Having those rules, having those things set in place is going to help you become a better trader. And that is going to make sure that you can survive bad trades. People who don't do that and don't have any limits, they don't have any rules, they go in and lose 50% and just, all right, don't study the mistakes, just keep going. That is how you get burned. That is how you lose money. That's how you get upset. You end up on Reddit and just, throwing away the stock market as a whole by not understanding how those rules work and making sure that you set yourself up for success. But where do you start, right? What are some of those orders that you should use when you're trading? What are some stocks that might help you out to be a better trader and investor? These are the videos you want to check out next.